muted subscription, Hexaware Technologies relists at a premium to the offer price of 708 rupees per share. While the interest of qualified institutional investors was running high during subscription, Hexaware IPO saw lukewarm response from other category of investors.
Sources tell CNBC TV 18, the insurance regulator IRDAI has formed a new 7-member committee led by former SBI Chairman Dinesh Khara. The committee will independently review and submit their suggestions to amend the amendments which were proposed to the Insurance Act. You're with us here on a fresh new edition of Markets Forward, your go-to program where we wrap up the day and also look ahead. I'm Prashant, with me, my colleague Surabhi. Surabhi, hi.
Hi, Prashant. Well, not a bad day, I guess. And finally, the broader market seeing some green. So not much on the headline index, but I guess bulls will still be happy.
Yeah, I mean, small cap index 2%, mid cap index up 1%, and Nifty Bank up 1%. So, yeah, I mean, the only index which in a way sulked a little bit was the Nifty. I mean, the Nifty didn't go anywhere by close. After some promise. By the way, at the day's highest point, we did briefly take out the 40-hourly exponential average. I mean, so you got to get past the hourly averages, and then you'll get to the 20 days, etc. 20 days, etc. is still far away. 23 and 14 is the 40, and we breached that. But then, of course, couldn't hold on to those levels. For the Bank Nifty, we're very now close, and it was a good session. Nifty Bank looks like more and more that's the index which is bottoming out and making a bit of a move. Here, the previous high comes into focus, not very far away. I think it's less than 0.5% away. 49,836 is the previous high for the Nifty Bank, and we'll see if we're able to do that tomorrow. Small cap index 2% gains. As I said, mid cap index 1%. Advances outnumbering declined some 3-1. And of course, we'll talk about stocks, the kind of names which moved. There is one irritation, of course, and that is all the talk of tariffs from Trump, and Trump again and again. In not every interview, but occasionally specifically mentioning India as a high tariff country and high taxation country, and wanting to impose tariffs, etc. So that's the irritation which is causing a little bit of anxiety, I guess, in many sectors, many parts of the market. What will eventually happen, we'll only know by the beginning of April. But I think that's at the margin. Something which is keeping people a little cautious. Surabhi.
Absolutely. If you talk about, the big headline today, like we've been telling you, it's really the mid-cap and small-cap part of the market. The fact that there were gains, the gains were well digested, and they remained intact. I mean, look at that graph. It's not too choppy. There wasn't too much of, nervousness. And the small-cap index was really soaring away, 350 points higher, looking very, very good. And the advanced decline ratio, don't even remember the last time we had more than 2,000 stocks advancing on the screen, but that's exactly what played out. I mean, the greens were outnumbering the reds by a huge distance today. And one sector that stood out really was the defense space, but broader PSUs as well. I mean, stocks like RVNL, etc. Many of them found takers today. So the PSC index or the CPSC index, these were doing well. Even the PSU banking space was quite smart, but defense really stood out as a theme. Having said that, there are lots of other stocks as well, mid-cap stocks beyond defense, that also found plenty of takers, and we will tell you about them as we go forward. In fact, let's tell you what's coming up over the next half hour or so. We'll, of course, put the spotlight on the specific movers and shakers. We'll have, Vivek joining in with a blow-by-blow account of what transpired today. One of the stocks in key focus today, of course, is Hexaware. It has come back to the street. The relisting happened, and it was well received by the market, almost 9% higher. We'll get you some of the details around that listing as well. And finally, insurance in focus once again, as the insurance regulator has formed a 7-member committee to recommend any changes to the proposed amendments to the Insurance Act. So more coming up on that as well. And then, of course, the events to watch. Let's kick it off then with the day's trading account. Over to Vivek for that.
Well, thank you so much for that. A very volatile trading session, but like you mentioned, the breadth very, very strong towards the end of the trading session. List of movers today, much stronger compared to what it has been over the last few weeks. First, like you mentioned, the banking pack. Today, they made a very strong comeback, especially some of the beaten down names, AU Small Finance Bank. Remember, this particular stock has seen significant selling pressure, but today ended as the top gainer as far as the bank pack was concerned. And along with that, even a whole host of other large cap banks too. All of them saw gains and ended with gains of over 1%. One stock from the broader end of the market that did very well in the NBFC pack was Manappuram Finance. The stock ended higher on very strong volumes, over 6.5%. It's been a very volatile trading week as far as Manappuram is concerned, but today it was on the right side of the move, over 6.5% higher. Like you mentioned, railway stocks, different stocks today staged a very sharp comeback. Look at RVNL, RailTel, ILCO, all of the railway stocks did very well, and some of the defense shipbuilder names too did very well, over 10% higher for both Garden Reach as well as Mazagon Dock. One stock from the broad end of the markets was Nava. There was a buyback announcement, the stock ended higher by over 11.5%, and one stock from the pharma pack that actually outperformed significantly was actually Suven Pharma. Ended higher by over 5%. Remember, today you saw a very long report from Macquarie Capital, initiated coverage on 4 names, the top pick being Suven Pharma, ended higher by over 5%. But on the other hand, the entire pharma pack, especially all of the generic names today, took it on the chin. Sharp recovery from the intraday lows, but still ended the day lower. All of the generic names, Aurobindo, Zydus, Natco, all of them ended lower on the back of worries of tariffs coming in. IT stocks, that was the other pocket of the market, so the defensive didn't do very well today. TCS, Infosys amongst the top drags today. LTI, Mindtree, TechM, some weak commentary coming in from Capgemini yesterday is something that actually spooked the IT stocks today. And one stock from the broader end of the markets, top laggard on the NSE 500 was Credit Access Grameen. In fact, saw selling pressure actually accelerate in the last half hour or so of the session today.
All right, Vivek, thank you very much for that. I mean, Credit Access, I'm not sure. There was no real news flow per se, but the stock was down 7% on very large volumes. But that's a good summary of what went and what moved today. Let's bring in Ambareesh Baliga, who's with us, to run us through what he made of things. Jay Thakkar of ICICI Securities is also with us. Jay, a quick word on the price action yesterday and today. Do you think it's looking like the initial stages of that much awaited, even if it's temporary, a bounce at least?
Afternoon to you, Prashant and Surbi. Of course, Prashant, I think that there is a very high possibility that we would see a bounce back coming in February, and we're just 7 trading sessions away now till the month end. See, a couple of reasons I would say, Prashant. One is that historically, if you see that Nifty has not closed in the negative territory for the 5 consecutive months. This is the 5th month. We've already seen 4 months in negative. Historically, we've seen that happening in 94, 98, 2001. Right, and post that we've seen a bounce back of at least 3%, minimum to 10% on the upside. So even if we say 3%, and if Nifty has to close positive, particularly this month, then 23,500 should be back by next Friday, and 3% positive should be in another, say, 24,000 or so. So going forward, I think 24,000 to 24,200 levels can be seen on Nifty after 4 months of negative close. And if this happens to be the 5th month, then it will be the first time in history, right, for Nifty. And secondly is that the mid and small cap indices, Prashant, has seen a good amount of panic, I would say. We saw Nifty 50 did not make a new low. Bank Nifty, it did not make a new low on a closing basis. Bank Nifty did not make a new low. In fact, the breadth of Nifty was quite positive. 32 stocks did not make a new low. Only 18 of them made a fresh lows as compared to the previous bottom of 24th Jan. And Prashant, was mid and small cap where the panic was this time around. We did not see IVs of Bank Nifty and Nifty going up, but then mid cap Nifty IV was up until up to 31. And historically, if you see of past 2 years, that has been the upper end of the range, and that's reversing now. And that is where we are seeing mid cap select Nifty or the mid cap Nifty, small cap Nifty, all of them are bouncing back. So I think that the pain out there was there, the panic was there, and we are seeing a rebound there. It was just Nifty IT Pharma which created a pressure today on the index. As Prashant, I think 22,600 on a closing basis on Nifty. If those levels are held, there's a fair chance that Nifty bounce back to 23,500 at least until the end of February.
Okay, all right, Jay, got that. Thanks very much. We will go to our next guest in just a bit. Ambareesh is also with us, but let's talk about some of the interesting stock movers today. And one of them definitely was the new listing, or shall I say relisting. I'm talking about Hexaware. It was a good homecoming for Hexaware. This is a company that exited the market, delisted in 2020, but decided to list again. And that listing happened with a gain of almost 8% today. This is despite, of course, slightly muted subscriptions to the issue. Vamakshi is here with more details on Hexaware, their business, and how they stack up compared to some of the peers. Vamakshi.
Well, absolutely, Surbi. A good comeback, right, for Hexaware today. When we look at the issue price, that is at 708 for the share. The company listed at 745, and throughout the course of the trading session, the stock was up and away. The stock is performing much better than expectations, especially after the grey market premium was rather flattish. Overall subscription was also rather muted at 2.66 times. Let's also understand how Hexaware stacks up against some of its peers. Now, Hexaware is most comparable to Persistent as well as Coforge. The first factor being that because all of these companies are mostly similar in size, and the second factor is that these three companies have been outpacing the growth that the rest of the industry has been seeing. Now, Hexaware, when you talk about the valuations, trades at a discount. Hexaware is trading at a 28 times 1 year forward multiple. This is at a marginal discount to Coforge, which is at 30 times, but it has coming in at a significant discount to Persistent, which is at 38 times. Now, it is also at a premium compared to the rest of the mid-cap IT pack. The reason Hexaware trades at a discount to Persistent as well as Coforge is because both of these companies have actually managed to grow faster than Hexaware. When we look at calendar year 23 revenue growth, Hexaware saw an uptick of 12.8%, but the growth in revenue was much higher for Persistent as well as Coforge. The market cap for Hexaware is also lower than Coforge and Persistent. Now, let's also understand something about the company. The company said that they're confident about growing faster than the industry. They've also reduced their dependence on some of their top clients. But a key risk key risk for this counter is the stake sale that could maybe take place in the future of PE promoter Carlyle, and they currently own nearly 74.5%. So, given those factors, Hexaware was in focus today.
Okay, all right, Pamakshi, thanks very much. Let's go to Ambareesh with this. Ambareesh, I don't know, I mean, if you had a look at the company recently when this issue was coming back, but what do you think? How might it stack up against some of those mid-cap IT names?
No, I mean, see, if you look at the valuation, I don't think the sellers, left anything much on the table for the IPO subscribers. So clearly, I mean, it was not expected to have a great listing as such. But I think, they're quite fortunate that they've been relisted on a day when the advanced decline ratio, became about 4:1. So I think that's what played in its favor, and we have seen close to a 7-8% sort of a hike from the issue price. Do I expect this to continue and moving up much more from here? I doubt, because even at these levels, like I said, it's quite steeply priced. So I really don't see much of an upside. Maybe at slightly higher levels, in case it goes to 790, 800, we could see some selling coming in from the subscribers who clearly would be getting much better than they would have expected.
Absolutely, got that. Let's actually listen to the CEO of Hexaware on what he sees as the company's growth outlook.
In our case, manufacturing accounts for just about 16%. That's the industry that gets first order impact from tariffs. For us, 84% of business has no first order impact from tariffs. So actually, we are quite bullish about administration policies on our overall demand. We continue to remain bullish that we will outgrow the industry quite a bit. I think demand for us at this stage, I will describe it as secular across all of our industries, except for manufacturing and consumer. And frankly, I think that was before the Trump era threat of tariffs. And I think tariffs will potentially or have the potential to make it slightly worse. But I'll say outside that pocket, our demand is secular.
Okay, demand is secular. So that's essentially what investors, I guess, want to hear. Now, the insurance regulator, IRDAI, has formed a committee which will recommend changes to the amendments to the Insurance Act. Right, so this is now going to get more delayed, I guess. Sources tell my colleague Yash that this committee will be led by former SBI Chairman Dinesh Khara. Yash, quickly take us through what you're learning.
Well, Prashant, it's the same story which is getting repeated again. And so many times it's happened just when you're, when I say when you, means the industry thinking that the insurance amendment bill is closer to its approval in the parliamentary session. There's something which comes up, indicating a further delay into it. The same things happened this time again. Just when we thought that it could be taken in the next parliamentary session, the insurance regulator has formed a new committee. This is a 7-member committee which the regulator has formed. And this committee is tasked with the responsibility of giving their individual and independent views in terms of, the Insurance Act amendment and all the changes that it's expected to get as far as the insurance sector is concerned. As I said, a 7-member committee headed by former SBI chairperson Dinesh Khara. It will have representations from various sectors. N.S. Kannan, the former MD and CEO of ICICI Pru Life, will be a part of it. Girish Radhakrishnan, the former CMD of United India, so representation from life and general insurance industry. Rakesh Joshi, former member IRDAI, so regulators representation. Saurabh Sinha, former ED RBI. Alok Mishra, MD and CEO MFIN, and finally L. Vishwanathan, legal expert, would be a part of this committee, and they would be giving their views expected in the next 2 to 3 months. Once those views are submitted with the regulator, that is the insurance regulator IRDAI, IRDAI would submit those views with the Department of Financial Services or DFS, and then the DFS will take a call whether the views are very, very different from what came before, and do they need to issue a new consultation paper, or can they just strike out things which do not find a consensus and keep the things which find a consensus from the old consultation paper itself.
Okay, all right, Yash, thank you very much for that. So that's insurance stocks in focus. Again, the waiting perhaps period gets a little longer, not for the policies, but I'm talking about the waiting period for more clarity on this insurance amendment bill. Well, with that, let's move on and talk about the defense space, because defense stocks had a nice, strong rally today in trade. Upasana is looking at a deep dive into how much the valuations have cooled off in this market correction and where the earnings are actually, still spelling a good picture. Upasana.
Well, certainly, Surbhi, defense stocks rallied in trade today after the steep correction. Now, let us look at the decline from the recent high and valuations in terms of 1-year forward PE. First up is Bharat Dynamics. The stock was down 41% from its recent highs, trading at 37.2 times 1-year forward PE, followed by BEL, which is down about 26 times, trading at 33 times its 1-year forward PE. BEML is also down 52%, trading around 25 times. Cochin Shipyard is down 56%, trading around somewhere 27.6 times. HAL is also down about 41%, trading around 26 times 1-year forward PE, followed by Mazgaon Dock, which is down 27%, trading around 24 times 1-year forward PE. Zentech is also down 60%, trading around 24 times. And lastly, Data Patterns is down 58%, trading around 32.5 times. Now let us look at the Q3 results of these companies, and one of the common trends that we are seeing is the strong revenue growth these companies have reported, but margins are under pressure for the most of the defense companies. But companies are retaining their FY25 guidance. Now let us look at Bharat Dynamics Q3 result. The revenue was up 38%. Numbers were a big miss in terms of margins, but revenue was above estimates. Now, BEL, strong growth reported by the company. It was a beat across the board, and company has maintained its margin guidance between 23 to 25%. Next up is BEML. The company is confident of achieving revenue growth in FY25 despite reporting a revenue degrowth of 16% in Q3. Cochin Shipyard, the numbers were weak in Q3. This was mainly dragged by company's shipbuilding segment. HAL, the margins were lower due to execution challenges, while the revenue is up 15% and margins up 40 basis points, but the margins are lower than the street estimates. Now, Mazgaon Dock, company is guiding for a revenue growth of 10 to 12% in FY25 and FY26, and revenue also stood strong, revenue growth of 33%. Zentech, revenue up 53%, and company says that it is on track to meet its FY25 revenue guidance of 900 crores. And lastly, Data Patterns, revenue is down about 16%, margins up 320 basis points, and company sticks to its FY25 revenue growth guidance of 20 to 25% and EBITDA margin guidance of somewhere around 35 to 40%. So all in all, defense sector remains in focus, and commentary also from these companies remains quite upbeat, retaining their FY25 guidance.
All right, Upasana, thank you very much for that. So that is defense, right? I mean, it's one of those first sectors which peaked out. And today, for the first time, we saw across the board buying in that space. Jay and Ambareesh, thank you very much for joining us. Shorter conversation today, but appreciate your time here as always. We head into a quick break. We'll just leave you with the soundbites from Sridhar Sivaram of Enam Holdings. He thinks this year is going to be tough. We also had Pratik Gupta of Kotak Institutional Equities, sort of still saying mid-cap, small caps are trading at elevated valuations. We're back on the other side.
25, there's a lot of uncertainties, and Trump being just one of them. So what happens to tariff, how that plays out in the market. I think currency is the other issue, how our currency plays out. And my fear is that the currency can take the market up or down. If we have a stable currency, then the markets can be stable. If we have a volatile depreciating currency, if China does anything. So many variables. So in my view, 25 could be sort of the negative year. We had had 8 positive years, and it's highly possible that 25 is the year where we get negative returns. Micro will dominate. Macros are not very favorable. Let me put it that way. Years we had significant outperformance. That has reversed in FY25. We think that FY26 numbers could also get revised downward because there is some slowdown in consumption. We saw the FM also using the budget to boost consumption. So there is some slowdown in consumption. So gold has matched stock returns over a very long period of time. So I'm not so worried about what happens in the short term. It's an asset allocation. I'm still very bullish.
The earnings side, we're still somewhat conservative. We think we'll see modest earnings downgrades. At Kotak, for the Nifty, for example, we are projecting about a 15% earnings growth for the Nifty in FY26 and another 14-15% in FY27. We think there could be some modest downgrades to FY26 earnings estimates. As far as the market as a whole is concerned, I think the large cap space, we think there is value emerging over there. That's a segment we typically like. We don't see too much downside over there. But the small and mid caps, by and large, and there will be exceptions, but by and large is still trading at expensive multiples, the small cap index in particular.
In the event that there is some sort of ceasefire between Russia and Ukraine, peace settlement down the road, what does that mean? That means Russian sanctions on Russia come off, and that probably brings Russian oil supplies up quite considerably, and that's going to put downward pressure on the oil price. So I think oil is going to stay quite soft over the next several months, and that will obviously be helpful for Indian inflation.
To watch. Let's kick it off then with the day's trading account. Over to Vivek for that.
Well, thank you so much for that. A very volatile trading session, but like you mentioned, the breadth very, very strong towards the end of the trading session. List of movers today, much stronger compared to what it has been over the last few weeks. First, like you mentioned, the banking pack. Today, they made a very strong comeback, especially some of the beaten down names, AU Small Finance Bank. Remember, this particular stock has seen significant selling pressure, but today ended as the top gainer as far as the bank pack was concerned. And along with that, even a whole host of other large cap banks too, all of them saw gains and ended with gains of over 1%. One stock from the broader end of the market that did very well in the NBFC pack was Manappuram Finance. The stock ended higher on very strong volumes, over 6.5%. It's been a very volatile trading week as far as Manappuram is concerned, but today it was on the right side of the move, over 6.5% higher. Like you mentioned, railway stocks, different stocks today staged a very sharp comeback. Look at RVNL, Railtel, Ilco, all of the railway stocks did very well, and some of the defense shipbuilder names too did very well, over 10% higher for both Garden Reach as well as Mazagon Dock. One stock from the broad end of the markets was Nava. There was a buyback announcement, the stock ended higher by over 11.5%, and one stock from the pharma pack that actually outperformed significantly was actually Suven Pharma. Ended higher by over 5%. Remember, today you saw a very long report from Macquarie Capital, initiated coverage on 4 names, the top pick being Suven Pharma, ended higher by over 5%. But on the other hand, the entire pharma pack, especially all of the generic names today, took it on the chin. Sharp recovery from the intraday lows, but still ended the day lower. All of the generic names, Aurobindo, Zydus, Natco, all of them ended lower on the back of worries of tariffs coming in. IT stocks, that was the other pocket of the market, so the defensive didn't do very well today. TCS, Infosys amongst the top drags today. LTI, Mindtree, TechM, some weak commentary coming in from Capgemini yesterday is something that actually spooked the IT stocks today. And one stock from the broader end of the markets, top laggard on the NSE 500 was Credit Access Grameen. In fact, saw selling pressure actually accelerate the last half hour or so of the session today.
All right, Vivek, thank you very much for that. I mean, Credit Access, I'm not sure. There was no real news flow per se, but the stock was down 7% on very large volumes. But that's a good summary of what went and what moved today. Let's bring in Ambareesh Baliga, who's with us, to run us through what he made of things. Thakkar of ICICI Securities is also with us. Jay, a quick word on the price action yesterday and today. Do you think it's looking like the initial stages of that much awaited, even if it's temporary, a bounce at least?
Afternoon to you, Prashant and Surbhi. Of course, Prashant, I think that there is a very high possibility that we would see a bounce back coming in February, and we're just 7 trading sessions away now till the month end. See, a couple of reasons I would say, Prashant. One is that historically, if you see that Nifty has not closed in the negative territory for the 5 consecutive months. This is the 5th month. We've already seen 4 months in negative. Historically, we've seen that happening in 94, 98, 2001. Right, and post that we've seen a bounce back of at least 3%, minimum to 10% on the upside. So even if we say 3%, and if Nifty has to close positive, particularly this month, then 23,500 should be back by next Friday, and 3% positive should be in another, say, 24,000 or so. So going forward, I think 24,000 to 24,200 levels can be seen on Nifty after 4 months of negative close. And if this happens to be the 5th month, then it will be the first time in history, right, for Nifty. And secondly is that the mid and small cap indices, Prashant, has seen a good amount of panic, I would say. We saw Nifty